What's going on, family? How are you? How are you? How are you? How are you? Welcome, 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 welcome. Make sure we're good. We're vibing out. We're hanging out. Turn down the vibes for a second. Just gonna post to social real quick. Let everybody know tuning in, because I feel like folks just just maybe forget. That free game is being given out every Sunday. So let me know where you're tuning in from down in the chat. It's good to see you. Hopefully you're doing well. Hope you had an amazing weekend. It's crazy. It's August, new month. And we got some selling coming in. So we'll get officially started in 2 minutes. 2 minutes. Just letting everybody kind of tap in. What's going on, Marlon from Miami? What's going on, brother? It's doing all right. Marlon's been killing it. Absolutely killing it. I had someone text me, you know who you are. Said, is this normal? Is this supposed to be this easy? I'm like, no one ever said anything was easy, but it's kind of like that Kobe crossover. You know what I mean? You practice enough times, you keep going, it becomes instinctual, becomes natural. So what everyone's feeling in trading and in investing, hopefully from this channel and also from just in general, trying to learn this skill set that's becoming easier. Cool. All right, let's get to it. I'll raise my vibe a little bit. I'm an easy 10 to 20%. I'm out. Exactly. Exactly. Hey, that's better than a savings account, man. That's better than the S&P all year. Obviously, you want to long-term invest, which I know you already do. Most people do. 401ks, savings, things like that. But it's like, wow, okay, if I can expedite this a little bit, right, safely, use the right position sizing, all those things, then I can earn some extra money without having to do much, right? So I know folks start pouring in as YouTube starts pushing this video out into the YouTube streets. So I'm gonna go ahead and get going and officially start, but I just wanted to welcome everybody in. All right, it's my chill welcome until I start turning up my professionalism, I guess. All right, let's turn off the vibes just so there's no interruption with the background music. All right, cool. All right, there's our 2 minutes. All right, everybody, welcome into our Stock Sermon Sunday. This is our Sunday series that we do for the stock market here on this channel, Dr. Brian Trades. My name is Dr. Brian or Dr. B. For those of you just casually, you can just call me Brian, okay? That is a real doctorate, is a doctorate of pharmacy. Yes, I know it sounds crazy that I have transitioned into this entrepreneurial, finance, trading, business, all that kind of stuff. It has nothing to do with the back end of what I was trained in. However, there's a lot of things and skills I still use to this day. It just was translated. It's like jumping on a different train, right? Like you're on one train and use the same skill. You just jump on a different train. You're like, oh, I can go a lot faster this way, right? So I was learning a lot of information very fast, all the medications. So if you look in the back of the pharmacy and you're like, how in the world does my pharmacist and my doctor know exactly what to prescribe to me or not to prescribe to me? And how they know that this doesn't interact with that and this, we learn it by classes. Right. So if you ever want to know how this translated, if I look at the stock market and I'm like, oh, all these different companies have each a specific thing that they're trying to do in the marketplace, right? They're trying to solve a specific problem. So if they're trying to solve a specific problem, they also have symptoms. And that's where another company comes in. That's where you have the Uber come in, then you have the Lyft come in, and then so on and so forth. Right. So it's a never ending cycle of just simply learning. And that's what I want to get people across is whatever you're trying to do in life, right? Do not let your job define you. Do not let your career define you. Do not let what other people and titles that they put on your name define you. You are you, uniquely you. You have a unique DNA blueprint on your hand when you open up your palm. So make sure that you stay true to that. Make sure you chase those dreams still, no matter what age, no matter what you got going on. Still ask questions. Still be curious about life. Because at any moment you can change whatever you decide to do to start fulfilling. And the whole notion of adulting or taking care of business, yeah, take care of your business, but also don't settle just because, my time has passed and, this technology is too fast for me. Whatever excuse that you give yourself, I don't have enough time. I've heard it all, right? I even told myself those things, right? So just if you can use myself as a muse, if you use someone else as a muse, I don't like to use motivation. That is not a word that I use personally in my life. It is inspiration. So if you look at someone, you're inspired by what they do and what they're doing and how they behave or whatever, take bits and pieces of it and put it into your DNA and say, okay, maybe I can intertwine some things. Motivation typically comes from extrinsic things. I don't feel motivated today. That's internal. It's not external. All right. You have everything in you that you need to wake up on time, to show up to the market, to do your due diligence, and to make it work. Right. And along the way, you will take losses, whatever that loss is: family loss, financial loss, emotional loss, spiritual loss, physical gain, weight gain, right? That you may consider a loss, whatever it is. All right. So love it. There's my little two spiels. Like, dude, get to the daggone stocks. All right, everybody, here's our rundown today. As always, I try to keep you right around an hour time frame. So make sure you have your charts up. If you don't know anything about the charts, watch and listen. There's a chart video on my channel called How to Read a Stock Chart. Go watch that. If you've not downloaded Webull, which is what I personally use, if you like the way my charts are set up, right? I do have some Webull tutorials on the channel as well. If you're inside of Leverage University or you're not and you want to become a part of our community where we're giving stock tips, entrepreneurial advice, I'm a life coach as well. So the little inspiration thing that you heard at the beginning, I do coach people on their mental, spiritual, emotional state internally to show up as the best version of themselves. So if any of those things interest you, you can click the links down below after this video or just DM on, as you can see, the Instagram or Twitter there. And I do check those as well. All right. So let's jump into it. All righty. Let's go into our earnings for this week and look at what we got on the calendar. Okay. So for those of you that are new, because I do have new people show up or rewatch these videos, we go through our fundamental analysis. There's two ways to analyze the stock market. There's fundamental, meaning all the news that you hear from CNBC, what's coming from the White House, so on and so forth. You hear about these rate cuts and the Fed and the beef between Trump and Fed Powell, right? Those are fundamental things, as well as the companies and their earnings reports, okay? So these are fundamentals that we have to go over because they do affect the market going up or down. What I love is I love technical analysis. Technical analysis is simply the charts, right? So a lot of people are typically trading or investing off of vibes, right? Simply meaning what their friend said, what their person said. Hey man, did you check out this thing? You should invest in it. No idea how to like look at anything, right? It's just your friend said this, or the CNBC said this is going up tomorrow, right? But a lot of times that creates traps for a lot of individuals, especially retail investors, i.e. us. It creates traps that we chase the highs, we buy the highs, and we're wondering why we're always behind, right? So just understand that that is the way. If you watch how I analyze, how I get to a decision or a trade plan, put that in your repertoire, okay? So earnings, what we got on the docket, we've already had last 2 weeks have been starting off the trajectory of earnings season. We've had our tech earnings that came out the last 2 weeks. We still have some more, as you can see, the semiconductors coming in here, AMD, Supermicro, SMCI, for those that know. We got Caterpillar is another big one here. We've got Ionic, my sleeper there. For those who grabbed Ionic at underneath $7, 2023, 2024, you know, okay, if you're in Leverage University. I'll go over that chart as well. We got McDonald's, good old McDonald's there. We got ELF, okay, that had a really good earnings. We got Trade Desk, TTD, okay, that's also at a severe discount. SoundHound as well. So a lot more on the docket. Pretty much, if you've been watching these Sunday market analyses, you've understood that during earnings season, each and every day, we need to be locked in, okay? Put a 1 down below if you're in Leverage University and we have been on the absolute winning streak, not just with trading, but also if you bought any shares back in April, March, maybe even got in late and bought some shares when we found some dip opportunities. Put a 1 down below if we've been winning pretty nicely as of late. It's been really, really strategic. Okay. So I say that to say that during earnings season, each and every day is important. So after the market closes on Monday, I'll be kind of planning out Tuesday. What earnings do we have? Which one should I be looking up? So when I wake up in the morning, I'm not scrambling around. I can already have my charts ready, which ones I want to trade, what direction they're going. A lot of money can be made with trading more specifically. Long-term, yes, if you're a long-term holder of some of these companies and they pop like Meta did, Microsoft, great. That's expected, right? That you have those solid companies that you're holding, but with trading more specifically, day trading, swing trading, in general, we're in and out of plays to generate profits in a short span of time. A lot of money can be made as well. Okay. And then you can reinvest those profits back into some of these long-term dips. Okay. Or put them in your bank account. Either way. All right. So nothing here other than on Monday, we want to pay attention to after close, Palantir and HIMS. So when I look at this, that means I'm looking at it on Tuesday morning, typically. Okay. Tuesday morning, I'm looking at it. I have not been doing any, for those that know, any earnings lottos. It's not worth the risk personally. You're just guessing and gambling. If it doesn't go your way, you're all thrown off. Okay. So I've been waiting till after the earnings reports and then trading those top tier companies with their volatility back and forth. Okay. Disclaimer. If you have been trading for a while and you're watching these videos and you're like, Brian, I do earnings lottos. That simply means, for those that don't know that term, that simply means I enter a trade before the earnings reports, meaning you are thinking the earnings are going to go up or the earnings are going to go down. Now, there are ways to kind of predict or suggest which way they might go, but guess what? What happened to Amazon? Amazon had decent earnings and they dropped. Did we not talk about that? Right? Apple had decent earnings, right? But they're still a little bit skewed on like the forward guidance of where they're trying to go with these tariffs coming. So they opened up and then dropped. So that's what can happen if you've never like been around earnings season with trading more specifically. The only reason I'm saying that is because I've had people message me like, Brian, what happened to coin? What happened? Like, man, I thought that they're going to go back up, right? I'm like, yeah, but that's why earnings, you just wait, right? Own the company if you believe in the company with shares, but a lot of times just wait. If there's a lotto that's worth it and you know, okay? What did we do with Lilly last time? Okay. So if there is a lotto, I do not mention those on any public platform. I only mention it inside of our Discord, where I have a very specific channel on earnings calendar. I go to my threads and we have lottos. Okay. Very specific trades that I will enter with good risk to reward, where the last lotto that we took, 1,500%. That was a runner I still had. Okay. That was a runner I still had. For those that remember this trade, it was an awesome trade. We entered the lotto right here and it dropped overnight. Woke up to free money. Okay. Everybody good with that? Can I get a 3 in the chat if you're good? Does that help with understanding earnings? Okay. So when I'm doing my stock sermon Sundays, I don't just present the information. I'm also trying to teach as well slightly so you understand what I'm talking about when I mention something. Everybody good? Cool? All right. All right. Let's jump into, as always, we jump into the, what is it? Economic calendar. Going blank here. All right. Nothing really there other than maybe Thursday could be something, but as you can see, pretty light week as far as the calendar goes for data reports. Okay, we got some factory orders, 10 a.m. data on Monday, so that could present some volatility. They come in decent. We could pop back to the upside. We'll talk about that in a second. And then on Thursday, we got some data that are coming in. Wholesale inventories is important, consumer credit, but it's pretty much a free week. So whichever way the market decides to go or recover, then we can see that direction continue. All right. Other than, as we know, Trump talking and yapping his mouth, all those things are included. Okay. Let me get off of this and go into our charts where the money is made. Okay. So again, this is Webull. I personally use Webull for charting. I also trade on it. I use typically Charles Schwab for my long term, but Webull, I personally love the trading platform, right? And also the charts. Now, if you use Robinhood Legend or Robinhood, I still use that as well. So it's just based on your comfortability of how you can enter a trade, how you like the look of it, the feel of it, and you will start to assess that as you get more into this, right? So however you like to do it, it's perfectly fine. I think Marlon's still on Schwab as well. So it does not matter, whatever you're most comfortable with. The only difference that a lot of people ask me is like, what's the difference between any of them? Nothing other than the maybe the speed of execution. So if you want to get in and out of a trade very quickly or whatever, but they're becoming pretty much similar, right? So let's jump into SPY per usual. Let's look at the S&P 500 and see what happened from last week. Okay, so as always, have your charts up. If you don't have your charts, go look at the how to read a stock chart. Set it up. If you need 101, any of those things, make sure you join Leverage University or reach out privately. Okay. All right. So let me erase everything here and just start from a clean chart on the S&P 500 ETF SPY. The reason why we analyze this first is because the top 500 companies at the time of this recording, right, it gives us an overall view of what the overall market is doing. So if the overall market is weak, right, then we want to see the respective stocks that we're watching in comparison to the overall market. So if the market's falling, is Apple falling with the market, right? Is another stock going up against it, right? So that's why we analyze that. Also QQQ, which is the NASDAQ, the tech index. There we go. All right. So SPY. We've got a monthly chart up here because we just started a new month and we want to analyze how this month is opening up. So we haven't had a red opening to a month necessarily, right? Very slightly here in May, right? Obviously, this is the dip that we had in April. And then we have July, and then we have June, and then we have May and April. So what you'll notice here on the chart, if you don't, the candlestick is what tells us the information that we need to know. So this candlestick of July started showing a little bit of a top wick on the candle. So when you watch that video, this candle was once solid green. Okay, it looked like that. And then it sold off back down to close like that. Okay. So as the candles are moving, as the month ended, it showed us that people were profit taking. Okay. There was some profit taking. There were some sellers that kind of stepped in. All right. So what I want to do is I want to mark the close of that last month, which is the top of that body of the candle, which is at 632.18. Okay. I also want to mark the top of the wick of the candle, the highest point that we got towards that close of the month. So it dropped about $8. Okay. So that whole little gap right there is where sellers kind of stepped in. Then we opened up a new month and it opened down here at 626. Okay. And started falling immediately. There was really no buyers that stepped in just yet. Okay. So now, as you can see, the market, or SPY more specifically, is sitting at 621.22, or just say 621 if we round it to that. Okay. So that is telling me that there's a little bit of selling pressure, a little bit of profit taking. People are like, hey, I need to go ahead and trim some of these profits. I've had 3 solid months from here, 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 and here. I've had a great summer for my long-term portfolio, for any trades that I held all summer. Let me go ahead and trim some of this stuff. Okay. So that's how an investor or a person that looks at technical analysis will vocalize that. Okay. So with that being said, now I can start kind of tightening up my analysis. Okay. So that gets me to how the week is going to go. So another thing that I use personally is what we call the RSI. It is an indicator, the relative strength index. The relative strength index shows us whether the stock or whatever we're watching or looking at is overbought. You kind of see this area right here on the indicator. I just made it bigger. Okay. If I zoom out a little bit. Okay. Overbought. Okay. And then slightly oversold. You kind of see how it matches the stock chart. Okay. So A lot of people get confused on this. When I'm teaching, it's like, well, there's two lines going on. This is the stock chart. This is your indicator RSI. So when I look at where it was up here, what happened when it was on the chart? It started selling off, right? When the RSI got up here on a monthly time frame, that's where the big fall happened. So that's how investors or traders know. For those of you that think this is a game or it's gambling or whatever, that's how we have a high percentage of understanding when the selling or the buying is going to come in. Okay. So when you hear those headlines, oh, beware, or beware the selling, it's not fear mongering. It's a true analysis that, yes, it's coming in. So we're not shocked, right? When you wake up on Monday morning, like what happened, or excuse me, on Friday morning, you wake up like, why is the stock market red? You don't have to ask those questions. That makes sense? Like, let's get out of that mindset, because that's how I grew up, right? I remember my parents or just any adult at the time would wake up, was like, why is the stock market down? If only you knew. Now, if you had a financial advisor or you had a financial person in your family that knew exactly what to do, when to do it, why to do it exactly, and knew exactly when to buy, exactly when to sell, you were blessed. Okay. And that's why a lot of us in our 30s, in our 40s, in our 50s, in our 60s, whoever you are, right? You're now being privy to a lot of this of, oh man, I can actually, this is not just for the New York stocks traders. Like this, I can learn a chart and know when big money's going to buy, when big money's going to sell, right? I can be a part of the hedge fund conversations because I'm looking at the same chart they're looking at. Make sense? Okay. So let's go back to the monthly chart. Go back to the monthly chart. Go back to that RSI. Now it makes sense. So you see that RSI right there is a little bit overdone, a little bit overdone. There's where the selling came in. And if we look at the stock chart, there's where some selling came in. Okay. Now you never know how far it's going to continue until the next day opens up or to that price action shows us. So the candles, it's very difficult. That's why I tell someone to join a group, right? Whatever group you trust or whatever, or, have a partner or a buddy, you've got to see the candles moving. Right? Like you can't look at this chart on Stock Sermon Sundays and be like, okay. And then you wake up in the morning and it's like, how do you know it was going to do that? Right? You got to see the candles moving to understand what's going on. Okay. So let's jump into the weekly time frame. So all I'm doing is go down in intervals here on the weekly time frame. We've got a break of structure slightly. Okay. So what you want to look at on the weekly time frame is the same thing. Okay. Do you see right there on the last week? The previous week to last, okay, second to last week in July, we had this candle that held 626 and bounced up off of there. Well, before it was resistance. So about 625, 626 was resistance, right? Couldn't get really above that level, right? It was getting stuck, coming back down. And then finally it broke up above it. Okay. So former resistance or former support now again becomes a little bit of resistance. Okay. It's very slight. If I mark that area, that is now a resistance zone again, because it was not able to break down, hold, and kind of hold like that. Right. Because that's where buyers were last time. Got above there. There's buyers, bought it up. Okay. So when we're falling, the buyers should have stepped in right around this 626, 627, 630 area. Okay. But they didn't. It fell right through that. So now for buyers to get back in position, right, we've got to have a reclaim or a break back above that 625, 626. And then we can start reclaiming some of these levels back to, highs. Okay. So that's a weekly time frame. If we analyze the weekly RSI, we can also see that it is slightly overbought, right? Not in the caution area yet, like this area here, right? But it's slightly up there, same zone. Every time it got up in the zone, what happened in the stock? Sold off, and then big sell off. Okay. What is it doing at the exact same point? selling off. Not rocket science. All right. So let's jump down into a daily time frame, and this is where I start turning on some indicators. So you can see the daily time frames gotten more aggressive on the RSI standpoint. As if I look left on the RSI, how far did it drop? I can look how far it drops, and I can see it here still dropping. Okay. So if that's dropping pretty aggressively, I know that there is a potential if I go down in time frame to a 4-hour, it's starting to get to a level where there's maybe some buyers, right? So that's how I personally know, or I use in my strategy, not know, let me watch my words. That's how I use my strategy to know that, okay, we should pop on Monday. We should recover by Tuesday. We might have some upside days before we have more downside, right? Because I'm analyzing this RSI on different time frames, and I'm like, ooh, the higher the time frame, the more, I guess, confirming that move potentially is for a full day. That makes sense. Okay. So if I see a hourly, 4-hour, or daily RSI along with where the stock is, I don't stop charting, but I typically am looking for a pop if it's oversold. Okay. That hourly RSI is oversold. It should, if buyers can step back in tomorrow and Tuesday, we should pop back up into filling that gap. So we'll have a candle, should be, don't quote me on this. If we do, message me and say, Brian, it went up like you said. Okay. But I'm going to be reacting inside of my community for those days. Okay. So here we go. If it holds, it holds, it holds, we should have a candle that squeezes up like that. Okay. By Monday, Tuesday, Wednesday, or potentially it takes the full week. Who knows? All right. So that's what should happen due to this hourly RSI, also the 4-hour RSI. Okay. So expect that. Ideally, look for it. That's how, when I tell my folks, hey, just because you see red and it worked out on Friday does not mean enter another put on Friday. You're in support now. You missed the downside, the first move. You got to wait. Okay. So if I chart it, look at this. What happened at this level last time? It got to 619, 620. Look at this big wick of buyers that stepped back in. Where did it go to? Came down to that area, bounced, went back up to 625, went back up to 629, 630. Just look left. There's all your information that you need. The next step is actually watching the candles move and actually entering into a trade. It's very easy to chart on here, but actually entering into a trade and doing it and watching that it's holding, that's a different story. So we did see some sellers step out of their put positions, out of their selling positions, and some buyers did slightly step in towards the end of the day. So that tells me something, right? Cool. So now that I've got this full analysis, I know my game plan for Monday or Tuesday is to say, if we hold this level, right? Those of you remember biology, science, we have a hypothesis, right? If this, then that. If we hold 620 and start reclaiming back above 623, we should get a squeeze into 627 and potentially into 630 up into that gap. Give me a 5 in the chat. Give me a 5 in the chat. If that makes sense, if that sums up everything from an analysis standpoint of how I show up on Monday and Tuesday for trading. That is how any trader that's been in the market for a little while will analyze. And if they don't teach it or if they don't talk about it, that's what's going on in their minds. So it's not gambling. It's not guessing when they wake up. It's like, how is this person winning? They must be on just some lucky win streak. Right? I'm trying to debunk the folks that are like, I don't know about this. Right? Marlon said, I don't know what's happening, but something's working. Okay. And it doesn't mean that we're perfect. It means managing risk, because there are going to be losses where you can be wrong, can't control it. So if that doesn't happen, I've also got to be prepared for what happens if it doesn't happen. Right? If the negative news comes out, Trump starts talking about something and we fall a little bit lower. Okay, cool. We fall a little bit lower, but it does not negate the fact that we could squeeze up from there. All right. We good? Cool. Cool, cool, cool. Hopefully everyone's learning. That's my biggest thing. Hopefully everyone's learning. If you're learning and you have not subscribed or you have not, checked out other stuff we got, all right, maybe it's now the time. It's like, man, I'm actually learning something. Okay. So there's my SPY analysis. And it should coincide once I do this deep dive on SPY, okay, the overall market. Then it makes the rest of my analyses pretty easy, because if I'm looking for the overall market to slightly recover, then guess what I'm gonna be looking for the respective stocks that I'm potentially going to be trading? Potentially upside as well in the short term. Okay. Now here's a bigger idea that I'm looking at. Now this is just for this upcoming week, right? Here's a bigger idea I'm looking for. I think we have lower. The seasonality. Why I entitled this seasonality is because typically seasonality, August, September, and October are more bearish months. So if you ever wanted to know, when do I buy the stocks again? Or did I miss the move? Every year, especially more so in a bullish market, you're going to have March, April, which already happened, big dip, right? And you're going to have that seasonality right before the holidays. What happened last time before the holidays? Right before the election. Everything was going down. Everything was going down. And people were concerned, like Kamala, Trump, what do I do? And if you bought the dip just because of seasonality, it ripped into the holidays. And then we sold off into the new year again, right? So if we come lower, what I'm expecting, or looking for, I should say, is if we come here and we rebound into 630, 632, even if we get it back up into the 633s and we start seeing some, exhaustion. That's what I potentially am looking for going into September, October. Okay. So even if we pop, right, I want to watch what happens back up in this gap fill, because guess what? That could create a lower high. Right. So now we've changed directions. And for those that understand or have learned from myself or anyone else, chart patterns, we got a head and shoulders. Right. That is a bearish chart pattern for lower. So I'm playing chess with this. I've got a weekly analysis of how I want to trade the week, potentially a game plan for this week going into the first week of August. Right. And I've got a game plan for how maybe this season's going to go, how August or September is going to go, if I want to be prepared to buy the dip lower. And also if we pop, that could be another entry for a bigger move potentially down. Right. Especially if we treat this as what we call the neckline. If we break below 618, all right, kind of like what I told y'all last Sunday, if we break below this 630, it's going to get pretty ugly. What happened? For those that were here last week, broke below that 630, gap down, it got pretty ugly. Okay. So same idea. If we get below that 618, if we just say we don't go there immediately and just fall, right? But we recover slightly and then we start breaking lower, then that is the possibility of what's coming next. So you can prepare to say, okay, cool, sell it off. The problem with this is a lot of times is for long-term investors that aren't prepared for another big dip, right? They're holding the bag, right? You've been told, like, don't hold the bag. If I've got shares in something, I'm up 200, 300, 400%, whatever, Palantirs, Hood, whatever you got, all right? You've got to be prepared mentally for something like this to give a game plan, right? Managing a long-term portfolio is the same as trading. So if you prepare to hold those for 10 plus years, then just don't look at it, right? Like, okay, cool, it dropped, whatever. I may pick up some more, it'll go back up. My average cost is fine. But what happens is people panic, kind of like what they did in April, kind of like what we did in 2020. Panic sell, panic sell, panic sell. No, 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 no. And then it pops higher, right? Because people don't understand seasonality. I'm not saying, I say people lightly, but maybe you've been that person. I used to be that person. If you don't know, you don't know. So you're just going based off what you feel without any true way to look at the market and look at what's going to happen. Right. So we are, based on RSI, based on seasonality, we do have the potential for lower. Now, how far it goes, we're not sure. We don't know if Trump's going to tack on more tariffs. We don't know, if the interest rates are going to even happen, the cuts. We don't know, right? Because this was pretty drastic, this pullback here. All right, that was technically a bear market drop. That was 20+% drop. All right. So what I'm looking for, if you want a definitive answer, I'm kind of looking for more so maybe back to the previous all-time highs if we do pull back deeper, okay, would be right around here. Would be 610 to potentially dropping to that close to 600. So we would have a candle that would come all the way down here like that, right? But that shouldn't scare you if you're looking at a chart, because guess what? That's a break, retest, potentially to go back up during the holidays. All right. Cool. Now you've got a game plan for the overall market. Okay. So there's that. Levels. You just heard it. Hold 620, maybe even drops down close to 618, but 620, that psychological level, would love that to hold on SPY. Watch that 627. That was resistance last time right there. And then we got a gap fill. If it breaks up back above that 627, you got gap fill for about $3-4 more. Okay. So that would be calls for those that are trading options. Okay. Or buys for those in futures. Okay. QQQ. We don't need to do the whole SPY analysis, everything there like I just did. It pretty much looks roughly the same. As you can see, my chart's already ready. I've got a small level here in the middle, which will be my pivot point, 557. If we break back above 557, okay, maybe if you want to make it 558, there's a little bit of resistance there last time. If we break back above there, should squeeze back pretty aggressively back into 560, right? And then finish the squeeze back into the gap fill up to 564, 565. Okay. Which again, don't be shocked as what steps in after that move happens. Is it a lower high? Right. So we shall see if sellers step back in and we drop back right back to the bottom. Okay. Now, if we break, and for those of you that are extremely bullish, like Brian, new all-time highs, forget it, August, and then the selling will come in September. Okay, well, we got to get back above, mount back above 565 and have a candle like that. Then we can open up the next candle and go higher. But if this, then that. Let's not get ahead of ourselves, okay? But I do believe that this week could be a slight dip buying opportunity for some upside back, So I'll be looking for calls primarily for those inside Leverage University. If you didn't know, if we get a pop before we gap up and a put opportunity comes back in, great. Okay. So there's QQQ. We got some buyers down here at 550. Okay. Almost to the T, and 552. So if we hold 552 and we hold that psychological level of 550, right, then we got buyers sitting all right there. Okay. Back to the upside. All right. IWM, small caps. Okay. I love this dip actually on IWM. Small caps did not like the fact that there were really no definitive answers on rate cuts. Remember, small cap companies need those rate cuts for them to grow their companies. They do not need higher rates. They're running on small amount of cash, and some of them are a lot of the time leveraging debt to grow their company. Okay. So IWM, small caps, we've got this nice level here at 212, holding up, 212, holding up. And then we got that psych level, okay, round even numbers, typically 5s, 10s, right, of 515. So if we hold this 212, I do not want to short puts into that demand of support, okay? There's too many buyers sitting around here. Maybe we push a little bit lower into 210, even better. So, right, if I see lower, great. You see the buyers stepped in right there and the shorts or the puts exited. Okay, so as people were exiting their puts because they knew that that was demand or support where buyers were sitting, right? People picked up some dips and they're trying to ride it back up to that 220 level and then back up to 223. Okay. So same thing on IWM. If you're an IWM trader, which a lot of people are in my community, I think this could be a nice area to watch out for if we can't go any lower, meaning it fakes out down here, pops, and then we're squeezing. Okay. So it should be a nice trading day inside Leverage University tomorrow. Pretty easy. We'll see what happens if it stays down here. But again, taking it day by day. All right. So there's the analysis on IWM. If you want to wait for the break back into the gap and not catch the bottom, if we break back above 217, it's into the gap. You can confidently enter some calls for a nice scalp up in that 220 level. All right. Oh, let's go into our stocks. I'm gonna start speeding it up here because we're approaching our hour time frame at 8:30 Eastern Standard Time. All right, is that right? 5, 6, 7. Yeah. All right, let me go into Apple. Okay, Apple had a big dip. I didn't really read too much in their earnings. I know they had a slight beat. All right. But I have not looked into their earnings like in depth, all those good things. But most of the stuff was in line. I think it was just more so the tariff news that was shaking it up. Don't quote me on that. I didn't personally look. Just that's that my technicals are taking over. All I was watching for was that Apple was pushing back into that 200 level where those buyers were sitting last time. Last time we were hovering and consolidating right above this 198 to 200, right? We popped right back to 215. Okay. So if the market gets going and Apple's probably not the one I'm gonna be looking at, it's more so Amazon, which I'll go over next. Because Amazon had a really nice beat. It's just Bezos kind of selling off some stock. And again, the market getting fearful. Okay. So if this happens, Apple could be one to look on. So for those of you that are like, Brian, you only trade puts, put whisper, all that kind of stuff. These are the types of dips that I like personally on trading. I like bigger dips into bigger demand areas where I can trust a little bit more. Because as you see, when the selling gets aggressive, it gets aggressive. Okay. Yeah, the buying, you can find ways to buy back up. But when the selling comes in, it will take out a full 2 weeks of gains in one candle. Okay. So for me, I love trading the downside. Okay. You will learn if you will know how to trade the downside with me personally. So the upside, I like bigger demand areas. That just means I like to see it pushing into an area on a weekly or a daily time frame, which it's approaching. You see how big buyers step right in around this 200 area. So I'm interested. So I want to watch Apple this week of what it does at 200. I'm more so specifically talking to my traders. Okay. Long-term investors, just keep buying Apple, keep buying the dip if you trust it. If it's a little too slow to you, rotate your money somewhere else. Yes, Apple has been lagging for sure. Right. So Apple trading wise, I'll be paying attention to it, what it does in this area, because as we know, they'll have their releases, all that kind of stuff for their new iPhones and flip phone and all the stuff they got going on where they're not doing anything but charging more money. Okay. Give me the wired headphones again inside of my iPhone. Like, what are we doing? Give me a charger. Are you kidding me? Give me a block. It's ridiculous. Steve wouldn't have this. He wouldn't have it, man. He wouldn't have it. Okay. So Apple, watch for calls off of that area. If we see buyers step back in, we'll watch it. I'll look for a target back up to 208 would be my first level for profit target for trading. There's resistance right in there, former support resistance. So it'll be trading within this zone here. If it pops back up into there, and it could roll right back over. So a lot of sellers step back in. 208 would be that level that you would take it back up to. Now, here's one I'm really interested in because Amazon dropped on really good earnings. So I'm interested as Amazon. I've already entered a starter swing trade. I'm not going to announce it on here, but just know that I've entered a starter swing trade for Amazon for calls. Those inside of Leverage already posted in our swing trade channel. So I've already got a little starter position for a move back up to 220. It's kind of like that hood that we took, which I have serious FOMO on. I was thinking about it all week and I was like, are you kidding me? For those that took that trade, let me know down below. Put a 6 down below if you took that hood, that Robin Hood trade inside of it. Went, I think, 1,000%. All right, we bottom ticked the entry and it went 1,000% on Friday. $150 turned into $1,000 on one contract. Sick. So yes, 10 contracts would have been 10 bands. 10 bands in 6 hours. Right? All right. Neither here nor there, but I'm looking at the Amazon for that same type of move. And here's what I'm looking for. For those that were in that hood trade, do you see this falling wedge here where I'm seeing a little bit of breaking out of this wedge, maybe a retest? Now I am prepared for Amazon to fall a little bit lower into that 210 area, right? To fill a little bit of that gap if it falls a little bit lower. But I am prepared for buyers to step back in on Amazon somewhere in this 210 area, just slightly, to squeeze back up in that 220. Now, the gap fill, that's a bonus. I'm not sure how long that will take. I'm not sure exactly where the bottom will be just yet. We could fall all the way down to 205, but I'm willing to test it because of my system of the RSI. Look at the RSI on an hourly. Severely oversold. Look at the RSI on a 4 hour, severely oversold, and on a daily approaching that. So we could fall a little bit lower since that daily is not yet done, but that RSI on that hourly and that 4 hour, money. So there's that little gap that I was talking about on Amazon down in this 210 area that we could maybe try to just get into, which will be right here. So that gives me a little bit more room down lower there. Okay. So I will be paying attention to Amazon on Monday and Tuesday throughout the entirety of this week, along with obviously Palantir and, HIMS and everything else that we got on the docket. Okay. So Amazon in the short term, do I think Amazon can have lower? Yeah, potentially. Okay. Let's turn on our moving averages. We haven't done that in a minute. And Amazon coming down in this daily. Let me actually turn on more this time. There might be a daily 50 or daily 100 approaching. Okay, we got that daily 200 approaching right at 210 roughly. And then we have that daily 50 and daily 100 sitting right here. So if we flip back above this 218, which I already had marked, Amazon's going to start squeezing immediately into 220. If we squeeze back above that area, back in that daily 20 right there, and partially the gap fill and maybe the full gap fill all the way back up. Okay. So there's some of you free money. If you don't know how to do it, please be mindful. It's not financial advice. I'm just sharing here. If you know what you're doing, you can take your own analysis and look at it. But Amazon, highly interested in calls back up as it's approaching some of these buyer areas of support. And we'll see if it holds up there. All right. Microsoft. I kind of miss trading Microsoft. I kind of fumbled the bag on this put setup. I've been waiting to short Microsoft for a minute, but I'll just keep watching it. It's a grind up here. It would need to pop higher for me to short it. Maybe pop higher there and then give another opportunity back closer to 550, 540, something like that. Microsoft starts, filling the gap back down to 515, 500, right? There's buyers sitting right there. Okay. Microsoft, just pop right back off of there like that. So no trade. I don't really like Microsoft personally, for trading purposes. Great long-term shares. Awesome job there. Meta, and I'm going to cover coin as well, because I know a lot of people have questions on coin. Meta, same thing. Great short opportunity, massive gap fill as you see here all the way down. I was looking to short it. I can only say this. I have validation from people that, I don't need it. But those of you that watch me or in live trading every day, you know exactly what I mentioned on Meta on, I think, Friday or Thursday. I think I mentioned it on Thursday or Friday. I'm like, man, 750 put, 755 put, 760. I don't know. I'm going to wait. Headed right to 750. Okay. So need Meta to pop back up. I'll short it back up at the top here, closer to 770, or watch for a short, I should say. Okay. I think we got this full gap fill that could fill into the fall time frame, but we'll have to see. Okay. I think Meta personally wants 800. It just blew. Zuckerberg just blew the earnings off the water. Okay. You shouldn't even be mentioning shorting Meta. If I go out to the streets and I'm like, hey, I'm going to short Meta, someone like, you're doing what? So all these trades I'm just talking about as a trade. Okay. That means I could be in it for 30 minutes, an hour, a day. It's a very short trade opportunity. It does not mean I'm thinking Meta's going to tank. Okay. So when you hear someone saying they're shorting the market, that just means they're trading in the direction of where the risk to reward is. Right now, there's risk to reward more so to the downside. Okay. All right. So Meta, Microsoft, not really interested. Let me move Google up here. One of my top players this year for long term and also for trading. It's been treating me very well for trading purposes. So Google, I like 190 to 191 for a potential pop back higher. I like it up a little bit higher into that since there's so much more room potentially on SPY and QQQ to pop. I kind of want to watch Google because it was fairly, it was holding up, but it didn't do much on Friday. And I think Google is curling up here to retest that high and see what it does there. Does it go higher or do we pop back lower like that? Okay. So you can see exactly where the buyers and sellers are. Okay. Where it popped right there. So there's buyers right here at 189, 190, went up back up all the way back up to 197. Okay. But then there's sellers that are sitting right here at 193, right underneath 194 right there. So if I trade it back to the upside, there's targets for profit taking 191 and then 194. So again, right now, Google is sitting in support. Okay, so almost all these, as you can see, since we analyze SPY so deeply, we know exactly, okay, if SPY bounces or QQQ bounces and we get buyers stepping back in on Monday, Tuesday, potentially, or this week, then I want to look for some of these tech stocks that were dropping to recover, right? So Google, we can see it clear as day right there. You're more than welcome to copy my charts, okay? Let's keep going here. Let's jump into Tesla really quick. I'll jump into coin and kind of coincide it with, I like to do tech, semiconductors, and then kind of crypto, if y'all want to know. And then my kind of wild card movers like HIMS and, healthcare and stuff like that. Tesla, pretty much sitting in support. I mean, if I go to a weekly time frame, this is a macro support area right around 300. So Tesla's got a decision to make this week and the rest of potentially this month is what does it do here? I mean, is this a bounce opportunity where buyers step back in? It's a bull flag and we go higher for whatever reason? Or Tesla, they had awful earnings, So is this a bear flag and they come all the way back down to the low 200s and test that trend line? We don't know until it shows us what it does. If you can see here, this is a perfect example right back here in 2022. Okay. See how Tesla popped off this 215, hovers, start, getting a weak, pop lower, start failing that 300 and then just continue downwards. Right. So this is very pivotal what it does right here. Previous highs, does it bounce or not? We shall see. Okay. So I'll be paying attention to that as well. Haven't really been trading Tesla this year that much personally. It's just been riding off of Elon vibes and I'm not messing with it personally, but I know a lot of folks on these YouTube streets that trade Tesla. It used to be my baby as far as trading it. I still own shares. I still own TSLL shares, things like that. But it is the volatility of just what Elon says and what Trump says. I left it alone for trading purposes. Okay. That's just me. Okay. All right, let's go to semiconductors. We still got some semiconductors. So it's kind of like semiconductor earnings season right now. We got AMD this week, and then we got NVIDIA coming up at the end of this month. Okay. So we're starting to approach, we got SMCI as well. So I want to pay attention to the semiconductors for the month of August of what they're doing. Okay. Semiconductors also have a major play. They're a major player in the overall market, obviously, as we know, with NVIDIA being one of the top companies, if not moving back and forth as the top company. So if AMD comes in well, if NVIDIA starts, pushing up into their earnings and it wants to go to 200 plus, and people are like, man, NVIDIA is going to be 200 after earnings. Okay, that's fine. I'll probably do like Microsoft or Meta. I'll just short it for trading. If it pops any higher than this, up to 200 and wants to go up there, I'm shorting that. Okay, just telling you right now. I missed this short already. Okay, I told my group, I was like, if NVIDIA gets anywhere near 180, I'm gonna start entering some puts, short term. And it happened before I could enter. All right, so I don't really have much on NVIDIA personally because it's going to be, kind of mixed signals until AMD and SMCI kind of report. So I'll just be watching those this week. So I'll maybe leave semiconductors alone. I'll just be kind of on watch. I'll be primarily trading most of the tech companies, Google, Amazon, Apple. Maybe I'll trade, AMD post earnings. I don't know. AMD's been messing with my head all year. I've had some decent trades on it, but it's like a wild card. But I do like this selling up here at 180. But if it has great earnings, it'll blast through 180, go to 200 plus. Okay, so if you got AMD shares, if you picked up the dip, awesome job. As far as trading it, kind of just gonna wait and see what it does. Okay, so not really interested in any of those until their earnings reports. Shopify and some of the but the payment processing platforms have earnings this week as well, like Block, Shopify. Those are going to be interesting because there's a lot of room either direction. Okay. Shopify has been pretty decent as far as earnings, as far as trading it, and is sitting in resistance right now, as you can see. So it's got earnings this week. So I'll be paying attention to Shopify, Block, or Square. And those could have really good implementation within just the financial sector in general, the overall market. If some of these payment processors come in strong, we could have Amazon pop with Shopify. You get my drift? How many people use Shop Pay on Amazon? So that's how I'm starting to think about this week, which is why I kind of got interested in Amazon, because those two kind of coincide, buying from the summer, Prime Day, stuff like that. So Shopify, just be watching it. Palantir. I need to be moving this up because some of these you're like, what about this? What about that? Go ahead and put your stocks down below. I need to check the chat. Awful money destroy. Exactly. Apple is neglecting its customers. This is a huge shift in my analysis. This is much easier. Yes, it is. Yes, it is. All right. It makes the week go by easier. It just long term, you can just watch for your level, turn on alerts. And then for trading, you're like, okay, I already know what my full of SPY analysis is. Then I wake up, I know what kind of I'm looking for, right? I already kind of have a slight bias, but I'm open to the other side. All right, Palantir, just starting to get a little bit heavy. Now, if we look at it on a monthly time frame, right, that's not much of any type of selling. Okay, let's not get ahead of ourselves with Palantir thinking it's going to fall out the sky until we get a bigger monthly candle or a bigger break. But look at this RSI on a monthly on Palantir. Hopefully this doesn't turn into some type of SMCI situation. Okay. I don't think so, but you just never know. Look at SMCI on a monthly. Do y'all see this? SMCI, do y'all remember when SMCI just went absolutely nuts and went to like $1,200? And people were like, buy more SMCI, it's going stupid. And then just absolutely just crashed all the way back down to $200. Then they stock split and then it just crashed. Look where the RSI was on SMCI on a monthly. Does that not look eerily similar? 90 on a monthly, right? Look back where it was on a weekly time frame. Now, the Palantir and SMCI are two different companies, right? So, but look at that exactly on a weekly. It was up here at 90 on a weekly RSI. So kind of Palantir, I'm just like, what? It's not concerning. It's just like, okay, last time we were up at this high of RSI, we dropped, or I'd say pulled back from 124 back to about $62. So we cut it in half, right? From 124 back to, $60. So you drop 50%. Okay. So I don't know what's going to come in. I don't know if it's trying to go up to 200 first. I don't know what's going to happen. But if some selling kind of comes in, we could drop Palantir back into the close to $100. I'm just telling you right now. Okay, that's a possibility, right? And for those that have a lot of Palantir shares or are concerned about that, don't be concerned. We'll just essentially turn on our alerts to understand, are these levels holding up? There. Trend hasn't really broken. If we start breaking back below like 135, 130, it could potentially come back into this 120 level. You see those heavy buyers that step back in. It's also a confluence level right there. Previous all-time highs, and that's where we took off on Palantir, but we never retested it really. All right. So if it does break, it could have a candle back down like that. Okay. So I'm not really interested in trading Palantir yet. I kind of miss trading it personally for trading purposes, but Palantir's also got earnings coming up tomorrow after hours. So this is going to be very key. What Palantir does, can it uphold its standard, right? Can it blow the top off like Meta and Microsoft and keep killing it, right? Or is it like an Amazon, has good earnings, but just wasn't up to par and falls? Okay. So I'm just preparing a lot of folks that only think the market goes up just because a company is hyped and just because a company is great, right? Who would ever think Amazon would fall off of great earnings? It happens, right? So I'll be watching Palantir obviously on Tuesday for trading opportunities. Should be some easy money there once the contracts settle in. Hopefully it drops, because then it'll be an easy dip pickup and just ride it back up, right? That's what I really like on solid companies. Just drop on earnings, then you can pick it up and go. All right, let's see. All right, let's go to Hood, Robinhood. This is the trade we took on Robinhood, or we got out way too early. Bottom ticked this to the T right at 9. We entered right at 94.70. All right, 94.70. And the reason we entered is because I was on this chart right here, looking at this falling wedge on Friday, and I saw a change in direction right here. This is what I'm seeing on Amazon. Do you see the same thing I drew earlier about 30 minutes ago? This falling wedge. And once that wedge breaks out of that, then you're just going to start getting momentum right back to the upside. Took it back up to about 96, 97, took it out, and then it just absolutely ripped the rest of the day. So contracts went from $150 right here to close to $1,000 right here. You spend $150 right here, profit $1,000 right there in one day on one contract, just from simple analysis. Now, again, kind of fumbled the bag on this because there's a gap fill right here. It was a big gap. What can you do? All right. So that's what I'm kind of seeing on Amazon a little bit coming into this week, is a little bit of this kind of falling wedge formation here. And all I need to see is that holds up and continues to try to go up. Okay, a new high, 216. Okay, a break of 217. Okay, cool. We should start squeezing. So that's just my analysis, right, to see if it happens. All right. Because there's a lot of selling pressure right now, and it might continue a little bit more. All right, we're right at the top of the hour. I got nothing else to say about HIMS other than there's a little bit of profit taking before earnings, but they're GLP-1s. The only thing is, if they kind of follow this RSI with their earnings, it could drop down into this 54. If it drops lower, another dip pickup. It drops down to 50 and leaves a gap. Right? If earnings drop it down like this for whatever reason, there's a big earnings drop, dip pickup, right back up. That should be easy. Okay. If it pops for whatever reason, we go higher. Okay. I'll be looking to see where it pops into. So if earnings pop it higher, right, we've got previous all-time highs where there was big rejection, pop, big reject all the way back down. Okay, so we got to get above 73 to start targeting those higher levels. All right. So you can see these top wicks coming in pretty heavy here, right around 70, right around 70. So heavy sellers or profit taking all the way up in this area. All right. So I'll be prepared either way on Tuesday morning. So Palantir and also HIMS on Tuesday morning, looking for trading opportunities. Another one that looks really good that we've been trading really nicely, kind of missed the downside. I think we talked about this. If y'all remember, this head and shoulders that was absolutely beautiful right here that we called out that I missed my entry on twice and went right to target on that head and shoulders. Okay. Now the downside has already happened. Now it's back in support around $85. Okay. So this is Uber. Previous high. Okay. Step right back in, right at that level to potentially go back higher. Okay. And continue that uptrend. All right. So Uber, we'll be watching. Let me see if RSI is coinciding a little bit. 4 hour. Yeah, kind of sitting out here in this oversold range. We got some gap fills above. So yeah, I do like this Uber as well for upside calls potentially on this week. Okay. So if it continues to hold down here, hold down here, hold back up close to that $90 range. Okay. So put that on your watch list. Now, for those, let me take a pause really quick before we end. For those of you that are, let me get my big head back up here as well. Say it for the people in the back. For those of you that are like, hey, Brian, this is overwhelming. This is a lot. How are you going through this so fast? Please be mindful, again, that I've been in the markets actively doing this stuff since 2018. Okay. I just never shared it with anybody personally because I wanted to build up my skill set. So for those of you that are new to me, like where this dude come from, I wanted to build up my skill set before I started to proclaim it or announce it or say, hey, I can help a little bit, or hey, here's how I'm doing this. Right. So if you're like, this is a lot of stocks, how do you pick which one? All this stuff. For anyone that's beginning, I always say just focus on the tech stocks. Okay. They're going to have liquidity every day. I've traded almost everything on my watch list, so I know how they move, right? So I can help my community out if I call something out or if I'm trading something myself. Okay. But if you're getting overwhelmed about which one do I take, which trade do I take, which way this, just understand that the Mag 7, I tell anyone that's starting out, focus on SPY, QQQ, IWM, chart those, get comfortable with those movements. Take your trades consistently on Apple, Amazon, Google. All right. I think NVIDIA is okay as well right now. Just pick one semiconductor. And there is your 5 to 7 stocks you can just continuously look at every day. Right. The better you get charting or the comfortability, every stock kind of moves a little bit different. Some are a little faster, some are slower. Right. You know how their contracts move. You know how if I enter here, I'm getting more comfortable with Robinhood now again, because Robinhood was not moving like this at $20. Okay. But now that Robinhood is $100 stock, right, it's faster moving. So it can move $5, $10 a day. Right. So now it's gone up my list to actually day trading it and looking at it. Okay. So just wanted to kind of, come in and say that for anybody. Cause if I were listening to this and I'm like, man, I understand what he's saying, but like, it just is so much. And it's just like, and that's when you lose people, right? I never want to lose anybody on, something that it can be so lucrative as a side thing for you, or you can just pick it up whenever. You could stop trading for 3 months and you're like, man, I kind of need some money for holidays or this little vacation. Let me just see if I can make, couple $100, here or there. And then you got $500 for the weekend, right? Like you don't have to make this a full-time thing, but long-term invest. But if trading can bring you in like an extra $500 a month, right? I'm just talking about like realistic numbers that would help somebody out to say, man, okay, cool. Like that just covers groceries for the month, whatever it is. And that's very simple to do. I mean, Marlon can attest to this, Dreama, other people can attest it. Like, oh yeah, like I made $100 in a day, or yeah, I made $300, $400, $500 this week. And it felt like ease, right? So Yes, you will take some losses. Yes, some things will happen. Yes, you will be frustrated. All those things will come with it. But when you talk about risk to reward, it's like, is this worth it? Like I always mention that as I round out this, that there's a lot of things in life that you may have regrets on that you're like, man, that wasn't even worth it. Like I spent all that time, money, energy, and it didn't amount to anything but maybe a little stability here or there. Like real estate, cool. You flip a home, like 30 grand, 40 grand, 50 grand profit. Oh, okay, this is worth it. I'm gonna get to work. Man, this stock stuff, it seems so confusing, blah, blah, blah. I lost money here, but I can make $10,000 in a day clicking a button. Man, let me get myself on these charts. You see what I'm saying? Like, it's just like that mindset to me doesn't make sense to me. And that's where I try to push people as a coach. It's like when something's worth it, like work on it. It's worth it. So I'm comfortable staying up all night or doing lecture charting or being on here and doing this every Sunday because I'm like, yo, this is worth it. And you do not need a lot of money to do it. We spend $300-400 on a weekend. $300-400 on Friday would have made you $5,000. I'm trying to get folks fired up here at the end of this, okay? All right. Carvana. The PE doesn't make sense at all. Yeah. I'm just going to go to Carvana here. Carvana puts. Oh, for sure. Is well overvalued at this point. Is well overvalued. And yes, I do agree. Right? The PE ratio doesn't make sense. For anyone that doesn't know, I'm not going to go into that since we're rounding out, but it's another way to understand the value of a company, right? Price per earning. You just want to look at, is this company even worth that? Like, why is Carvana $400 per share? Like you start wrapping your heads like, wait, you sell cars out of a vending machine. Why are you $400? Right? So with that being said, you start looking at a company and saying, okay, might be a little bit overvalued. Who's going to pay $400 for Carvana? So with that being said, yes, I do agree. From a chart perspective, there's a massive gap as well, right? So from a technical perspective, Tanvir, I agree. Now the entry is also important. So I would say, Tanvir, if you're looking for Carvana puts and you enter right away, right? I've got to be mindful of this 360 to 363. Kind of this previous high could turn into a little bit of support and it could bounce right back up just slightly into that 380. And then maybe that's where, again, shorts come in. See that? So I would say break below that 360 will give you confidence to start getting into that gap and going lower, right? $5, $10 moves lower, filling the full gap all the way back down to 340 and maybe even lower, or enter closer to 380, 377, right? Back up into here where that kind of selling kind of really stepped in. See if you get a pop and then find the entry there. But yes, I agree. Yep. SoFi treated us nice as well. So for anyone that traded SoFi with us last week, we got a gap right here. I think it will pop again. We were trading SoFi calls and puts. Okay, so I do think SoFi, same thing. If the market's going to hold up a little bit, we could get a pop on SoFi back to 23, which again, we'll look for a lower high and then see if we can short it right back down. Okay. So SoFi can be in your repertoire if you liked how it moved, if you like how you could do contracts further out, if you liked, the simplicity of it, keep SoFi on your watch this week for trading opportunities as well. Okay. That's pretty much it. Healthcare, still watching healthcare. We got CNC, still got shares in CNC, Centene. I still think personally anywhere between 20 to 25 bucks, right? I've got a $40 target on CNC. When? I don't know when, but I just know that healthcare will recover over the next year's time frame. So that is pretty much a double up on your money. So keep that in mind on CNC. Another long term that I would watch as well would be Webull. Okay, the platform that I'm on, it's again in a buy zone, right? I've got a $20 target on this in the short term, and then we've got a higher target, kind of like a potential Robinhood. This is what Robinhood was doing before it took off. Okay, Webull and Robinhood are right there. So as Webull becomes, gets itself together, right? There we go. Exactly what Robinhood was doing when everyone was, oh man, Robinhood, they're not nothing. I don't know why you use that platform. They're scamming people. Meanwhile, the stock was $14 right here, right on a previous high, $14, and went to 100. So Webull, another one for anyone that's looking for long-term shares that is fairly cheap or inexpensive. Okay. All right. That's it, everybody. Right at the top of the hour, trying to wrap these up, get them quicker. Any final last questions in the chat that I can go over? If you enjoyed this, please let me know. Coin, appreciate you. I forgot. I'm sorry. Yep. Coinbase missed earnings, dropped back down into this demand area. Okay. So let's look at our RSI. It was due. I mean, this pop, it was right into previous all-time highs, right? Coin, here we go. Let's look at the RSI here. It needs to hold up 300, that psych level. And we've got an oversold level. So I do believe coin will recover in the short term if we see some holds pretty much right at 300 to 310. So I would not short coin down here into this demand. Look at that. Previous highs turn into potential support, and you can look for calls or an upside there. Now, because they missed earnings, what does this look like? Could they come lower? If they stay below that 390 or pop back up that high, fill that gap, could it come back down like that? Yes, it could. Especially if the market continues to sell off into the fall season. I've got a short-term idea of upside on coin to recover. And then as the market begins to settle in back at highs, right, we could knock it back down again. All right. So does that answer your question for coin? Is I would not short this unless we break, below 300. Then it's just a free fall, right? For whatever reason, it just starts free falling down. I personally don't like those types of trades where it breaks. I'd rather it pop and enter puts and then think more calls or think more upside as it's in support. Okay. That help? Yeah, exactly. Yeah. Now hood could be, nice upside as well. I want to watch that too as it, maybe holds. Right. So hood does have some support down here at how quickly that dip got bought up. It could try to retest back to these highs. If hood starts holding up that 100, I mean, but it's just so close to all-time highs and they're selling kind of coming in. But I do like that the buyer stepped in pretty aggressively. And if it reclaims 100 and the market starts pushing up, then yeah, I think I agree, Tanvir. And also on a 1 hour time frame is a little bit oversold. As you can see here, we could get a double bottom and get that repeat trade on hood back up like that. Okay. So everything's kind of in support right now. I know we had massive selling. Let's not get into any bear traps, right? Bear traps are when they're pushing down and everyone thinks, oh, now we need to trade the downside. It's in support. And then when it's pushing up and up and up and up and up, and I'm like, hey, be careful. Do not chase this upside. Do not enter calls in resistance. And then they get bull trapped and just pop right back down. Okay. So I'm be watching the traps this week. We're sitting in my opinion, bear trap territory where it traps people that want to short into support. All right. Cool. Was this good? MU, Sweeney, what's going on, bro? How are you? Yeah, MU and ARM also had earnings, so that's a good one as well. Yeah. Oh, I like this. I like this. I appreciate the reminder. Appreciate the reminder if you're still here. MU, this is in the semiconductor sector, if no one knew. Okay. So because it's in the semiconductor sector, it's going to be affected by SMCI and AMD. Okay. So if AMD and SMCI kind of have poor earnings or whatever, then MU could come lower down into there. Okay. But I am interested, or if you're interested in MU, I would watch it close to this $100 level to see if that holds up. Okay. So if you can see here, I always like to call people by their name. So I think it was Swanee. Okay. So look left here on MU. Do you see right there at that 105, 106, there was some buyers that stepped in? So I'm going to mark this as a green zone. Do you see right there where buyers kind of stepped in right there? Right. But also there's some, kind of a little bit of resistance right around like this 112, 113 area. Right. So I kind of want to mark that. So if I look right, it's kind of what happened last time. So we're kind of in this weird, zone right here between 104 and 112, or 105 and 112. Okay. So if I jump down into my time frames, look at that 1 hour and 4 hour RSI. Look what it's doing right in this zone. So this could be really nice and I personally think AMD is going to beat earnings. I personally think SMCI might have some decent guidance. They may talk their way out of some stuff. So I do believe that this move is possible. Fill those gaps, these gray areas back up, and we could get that squeeze back up to the highs, especially with this RSI sitting in this oversold area on a 4 hour and a 1 hour. So I appreciate that. It looks good. Looks good. Now, how far it's going to go, you may be thinking, okay, cool. I think, MU's $140, $150 stock. Okay. But by when is the key. So with trading purposes, I'm just looking from 104 to 112. Now, if it gets back above 115, then yeah, we can have something like that. That's very much possible. But I like to take it level to level until proven otherwise. Right. So hopefully that helps. But yeah, thinking calls, if you're trading it, thinking potential if you trade shares or equity, yeah, around $100. I think MU you can maybe begin picking some up, but just also be prepared for it to fall lower down into this next demand zone, which will be 85. Okay. So either holds up here and goes, or it breaks. Okay. So I got two buy zones right there and right here. Like that. Or where is it? Come on. Or like this. Cool. MP materials real quick. Oh, I don't trade this. I'm not really necessarily looking to trade. They got earnings this week too. This is kind of like almost a lotto setup to the downside. I think they're going to have a pullback. This is kind of my like rising wedge, kind of ready for this to break. If you know, you know. Okay. So I'm looking at that on MP materials. I think personally that if earnings don't come in as well, or if they pop on earnings, I think personally there'll be some profit taking back down. It'll start looking like that. So that's what I'll be looking for on MP materials, just for the oversoldness, the extensiveness of an 18 to potentially $70+ move. I think there'll be some profit taking eventually, and we potentially could pull back into those 50s. All right. So that's actually a decent lotto potentially, because I could put time on that. Huh. Interesting. Let me see. If it makes it, I don't know how much I need to calculate, but I don't know how much it will move, but a lotto back down into like maybe 55. Yeah, that could be interesting. Might be worth it for a 40, 50, $60 lotto. I'm gonna put that on the watch. I don't forget about that. Yeah, so that's what I would look at. If you already got shares in it, I'm not sure, Tanvir, what you're trying to do with it, but shares wise, if you got shares, if earnings report well, great. But I would be cautious, with this oversoldness into earnings, that they may have a little bit of soft guidance or they may pull back into the, low 50s or maybe 40s. But if they pop higher, you're sitting pretty. But if you're sitting good on some shares or sitting good on some call positions, I just be a little bit cautious, back up into there. But that's just me based off the technicals. It is holding that previous high at 60. So as long as it holds that, $60, breaks below that, you can see what happened last time. It got up into new highs, fell all the way back down, from $60, cut it in half to roughly $40. So $20 drop. It's got some gaps to fill as well. So that'd be my analysis on that. That's it. All right, everybody. Peace, love, and blessings. About to go on a little sunset hike here in Vegas. So yes, it is still sunny here. It is 5:45. So still sunny. Still got the rest of my evening. I don't want to take up y'all's because a lot of you are on the East Coast and Central Standard Time. Appreciate you. We will be making money yet again inside of Leverage University. Looking forward to having you inside, right? There's a 3-day trial link down below if you'd like to join, and we'll see you in the next one on next Sunday and for also weekly videos. Peace, love, and blessings to you. You have a great week. Tell your friends, tell your family, make